Alright guys, what's going on? Grab a pen and jot this down. Today we're going to quickly talk about Berkshire Hathaway, Warren Buffett, my history with the whole storyline, why I think it's important to kind of go back, reflect what's going on in the history of value investing, the fundamentals. I'll do a quick reflection on what I've kind of learned from studying him, what I thought happened this weekend, and why it's important to continue learning some of the fundamentals. So first up, I've written about this before. I have studied Benjamin Graham first by chance. I thought the Oracle of Omaha was like a made-up character. I didn't know Warren Buffett was real in the sense that he was delivering these high performance returns. Obviously, a lot of people promised 20, 25, 40, 50% returns. When I was in college, probably in 2008, 2007, I was not skeptical in the sense that who was he like that, but more of he sounds like some other guy who's just, in the middle of Omaha, Nebraska, talking about making investment returns. He didn't talk about it, but people wrote about it in the news. So before that, I learned that he studied this guy named Benjamin Graham. So I studied him. I studied Phil Fisher. I studied a lot of the guys that are written about in these books. So Graham wrote Security Analysis, The Intelligent Investor. I read The Intelligent Investor first because it's lighter, it's newer, it has a lot more updates and forwards. And I thought it was fantastic. It talked about more current history. It talked about what happened in the 2000s, what happened in the dot-com era, what happened, in certain cycles. Chapter 8 and Chapter 20 are two chapters that Buffett was talking about when he recommended reading the book. And those covered how to value a stock and the margin of safety and how to think about Mr. Market. So I thought it was interesting. It was really well read, well written. I recommend it to people. Nobody likes to read it because it's a boring book, to be honest. It doesn't really teach you about investing, but it teaches you how to think about the psychology of the markets. Less about the psychology, but it tells you about this is what the market is doing, this is what it's expecting you to do, and then you decide how you want to take action. Hence, the intelligent investor. Cool. Maybe 200-300 pages, long read, not exciting. If you like finance like myself, you'll find that book very helpful. The summer or later after that, I went over and looked at the Security Analysis book before I even really read anything about Buffett himself. I learned that he wrote the foreword to one of the versions of Security Analysis. He has like 6 versions of it because of Graham signed one, etc. So I thought it was interesting. Picked it up. It's like 700 pages long. It's extremely thick. It's like a book that you have to not only just sit down and get through, but you really have to take notes. So I don't know how long it took me. I think it took me like 2 weeks every single day. However many pages I probably reread multiple chapters, multiple pages. But the important thing, this book was written in 1934. So in just the end of the Great Depression era, Benjamin Graham was obviously, I think he was running money at that moment in time. Then he was teaching at Columbia probably. Buffett started studying in like the late 40s, 50s. I think he was born in 1930, so he started college around 1950, 1951. That's when he met Graham. But Graham was doing the scarbutt style investing. So he was looking at really, really low book value stocks that had high earnings power, had tremendous amount of cash flow, and they were trading at a discount, so maybe 10-20% of discount. So he's buying these companies that were producing a significant amount of cash. And at that time, it was industrials and railroads. So those are a very different business model than what we're used to typically today in 2025 when we have high tech and we're in more advanced manufacturing and hardware and software and e-commerce and technology and different delivery models and different ways to look at intangibles and goodwills. Buffett didn't have Buffett and Graham did not study on those fundamentals. We focus on goodwill, intangible assets, a lot of digital assets. They focus on raw, hard cash, hard assets, receivables, anything that was, hard inventory, property, plant, equipment, etc. So they looked at the earnings power of those hard assets, and that's how they kind of built this business early on in the value investing world. It wasn't really well known because what people don't understand is buying stocks and buying equities was not popular until the late 70s and 80s when it became popularized by computers because it lowered the cost of commission, and then discount retail brokers like Charles Schwab, Scottrade, E-Trade, all the big boys. So buying stocks was always very expensive. It was preferred for everybody to buy fixed income. Treasuries were very popular. Obviously, the United States was releasing these bonds because they had to fund World War One, World War Two. So fixed income brokers were making a lot of money because it was very attractive to buy high yield bonds. And we're talking about 5, 6, 7% risk-free rate. You can get as high as 10, 12, 15% yields. So it was a great investment to buy bonds. So nobody bought equities. There wasn't that much money invested in equities, and retail investors didn't have access to buying equities. The Dow Jones only had 30 stocks. The S&P 500 didn't exist until I think 1975. So the security analysis book from 1934 is a very, very old method of buying stocks, but it teaches you how to analyze the balance sheet, which Buffett adores, and then it teaches you how to understand the earnings and cash flow quality of a business. You want to buy companies with strong, repetitive, free cash flow. And actually, most investors don't have good fundamentals of that. It took myself many years to figure out what that meant in terms of numbers. Because a lot of companies can make it up and make it look promising over 2-3 years, but to have a business that has compounding power to deliver those cash flows over 20, 30, 40, 50 years, that's a business that has withstanded all the market volatilities, all the industry volatilities, all types of risks, both systemic and systematic. Those are things that you kind of learn. You're like, all right, maybe I just want to buy a good business at a great price, or maybe I want to buy a great business at a good price, which is what Charlie Munger brought to Berkshire and Warren Buffett many years later. I think in like might have been the late or early, I think mid 70s they were thinking about it. I don't remember the time when they started Berkshire, really, as an investment business. So I studied all that, great. What I really should have studied from day one, which most people don't tell you until it's very late, and most people don't have the capacity or patience to do it. You have to do it when you're really young or really old. You really have to have time to do it. Is you want to study the 50 years of the Berkshire shareholder letters written by Buffett, because he explains the storyline of how Buffett invests, how Berkshire was built, the investments they look at, and how that value compounds over time. Now, he's the only person who has a track record of delivering 19.9% annualized returns for 50 plus years, and he's documented it. What he does unusually is every shareholder letter, the annual report, actually starts with his returns, which people usually kind of hide somewhere in their letters. He starts with the returns even when it's a low year, bad year, or not a good year. And he's done it for so many years. I think 1965 is the starting date. And it just shows the power of consistency. So he writes like a 10-page report. Some years it's like 10, 20, 30 pages. Sometimes it's less. But if you have to read 50 of them, you got to buy the book or print them online because they're free. And then say, all right, how has his journey progressed from buying See's Candy to Geico to Coca-Cola to American Express, Capital Cities, ABC, and all these other business models that he's like kind of thinking about. Oh, this is the stuff that he's going through. Written very simply, very easy to read and understand. There are some details in the financials that you would want to understand if you really want to know what a great investment looks like. But you could read 25, 30 of those shareholder letters, and they're better equipped to educate you on how to make an investment, which most universities and online courses will never teach you, because it's actually difficult to learn how to make a great investment. You can learn how to value a stock, but to make a great investment is actually a skill that has to be acquired after making many mistakes. And he goes over a lot of his mistakes. So I use that. I took 8-9 years to learn and read all that stuff just to kind of digest it, so I never have to really want to go back and think about what is a value investor. Why doesn't anybody talk about devalue investing? The loss, making a loss investment, meaning they're going to make an investment and lose money, because that happens more often than people that make money or compound to make more money. And it's just good fundamentals. It's a great way to be like, all right, this is what the best investor in the world has done and made it work. 5-6 years into it, I learned that it wasn't the best strategy for me, only because he does not account for technology, intangible assets, and goodwill. And that is a more new age style investment. It started and was founded more in the early 2000s, when the dot-com era bust had rolled over, and we figured out how to monetize technology, software particularly, and online businesses, e-commerce like Amazon. And the question I always asked myself was, Bill Gates is close to Buffett. He was on the board for 20 years of Berkshire. And Buffett and Berkshire never bought a share of Microsoft. But Microsoft is one of the largest companies in the world. It's in the larger market cap than Berkshire. Bill Gates has a similar net worth, so a different business model. And then I saw these other guys, Zuckerberg, Bezos, all these guys that were technology oriented and investing in technology heavily. And Buffett was avoiding it up until Apple, which was until very recently, 2018, 2019. And that too, he still bought it at such a high level, and he made a tremendous amount of money for Berkshire by investing in it. So all these books you'll learn and read about Buffett, you'll find that they don't have the technology component to it, which is why that style doesn't match. And I figured out how to value it. I figured out how the monetization works, why it's a little different. And it's important to understand because we are continuously investing more as an economy into technology and services and software and hardware. And the old model has to be adapted or enhanced for that. So I don't know if somebody's going to write a book on it. I don't even know. It might become outdated the second it gets published, so it might even be worth someone's time. Doesn't matter. The important thing is to understand and master the fundamentals. So what goes on behind the scenes? So for many years, Buffett held the annual shareholder meeting in Omaha, Nebraska. Probably for 20, 30 years, nobody attended it except a handful of value investors. There are similar investors to Buffett that have value investing oriented shareholder meetings. I think Fairfax, Markel, Pershing Square is a new upcomer who's going to do something probably in a similar motive. There's probably a handful more that you probably don't realize that they're similar to Berkshire, but nobody really has the Berkshire model down because Buffett doesn't charge fees. He owns 30% of Berkshire. So up until like the mid to late 90s, nobody attended. In the last 25 to 35 years, it just got popularized, and the momentum for attendance increased to the point where I think about 40,000 people go to Omaha basically to worship capitalism, and it's pretty amazing. I've gone in 2017, and it was amazing. You get to meet so many like-minded people. They're just intelligent. They're rich. They're very successful in their own means. A lot of people go there for fun because it is very entertaining to go see him. Back then it was Charlie and the team, and now it's Ajit and Greg and all these people. And you just get the aura of this is what success in this field really looks like. It's pretty amazing. So overall, worked out well because you get to learn so much from it. Now they live stream it. They started in 2019, I think, so you don't really have to attend in person. And obviously, Buffett this weekend has stepped down, which was a natural. Obviously, he's going to step down at one point in time. He talked about this for many years, but Greg Abel is stepping in as CEO. He was I think unanimous approval this morning from the board. So all positive stuff, great learning environment. You get to learn how someone does like a 0 to whatever his net worth is to the age of 95 and say, all right, this is how you run a very successful business at scale, at the highest level, doing this investment strategy that clearly works at the highest return. Very impressive overall. And I would recommend you go look at the shareholder letters because they're a great learning environment. You can go learn, probably watch some of the live stream Q&A because there are people like Bill Ackman asked questions in the late 90s or the early 2000s. And a lot of very, very successful investors had approached Buffett for many years to ask him about investing. And he's definitely done a fantastic job of just getting even though he's not tech savvy, just by writing. He's gotten his word out into the world and said, this is how you invest, this is how I invest, this is how Berkshire makes money. So if you want to learn how a man who invests in companies that generate 20% annualized returns, or you want to deliver similar returns, which means you're going to double your money every 4 or 5 years, it's a good idea to start with the best. And I think it's just fantastic. We're very fortunate just to have the entire career of Buffett available to us for free, both in video and written form. And it's been pretty amazing. So I recommend checking it out. I recommend buying any of the Buffett books. There's so many of them that are so great. And there are a lot of things on Charlie Munger as well that are fantastic. But overall, amazing learning experience. My really big takeaway is go check out what he did every year. Wrote the annual letter every first or last week. Last week of February, first week of March or something. Well written, simple to read, great way to learn how to master the world of value investing.